Welcome to What the Fic, the show where I share with you how to profit from the fixed income, commodity, and currency markets. My name is Ian Cully, and today, let's talk about the US dollar. Specifically, how the dollar moves with the stock market, what the dollar is doing today, and where I think the dollar is going to be heading in the coming weeks. Before we get to the charts, nothing we discuss here constitutes a solicitation to buy or sell any security. This is for informational purposes only and not to be construed as investment advice. For more on that, head on over to allstarcharts.com/terms. So let's get to the charts. First chart here, US dollar index overlaid with the MSCI All Country World Index, ACWI. So that dark line, that top line is the dollar. And the lower line is global equities, not just US stocks, but stocks around the world. Now, what do you see? I see when the US dollar index goes down, All Country World Index catches higher. It's been that way since 2016. And when you look at the lower pane, we have a correlation study. And that dark red shows that negative correlation. It's generally the rule, right? The next chart is the US dollar index overlaid with two moving averages. In the red line, we have the 200-day moving average, a long-term trend. And in the dark blue line, or highlighted blue line, we have the intermediate or 50-day simple moving average. Now, when that 50-day simple moving average crosses below the 200-day, it's what we call in the industry a death cross. Now, I know it sounds alarming, but all it's really signaling to us is that the near-term trend is weaker than the longer-term trend. Now, the circles here highlighted in yellow point out whenever we get these crossovers, that longer-term trend tends to follow a 50-day simple moving average. But what's important here isn't so much what the dollar's doing. It's what stocks do whenever we get signals, whenever we get crossovers like this. Here in this next table, it highlights the returns of the S&P 500 over the near term, 5 days, all the way to 252 days. Now, the most recent signal, death cross, was last January, January 6th. Now, since then, the US dollar index basically went nowhere. It just chopped sideways. But boy, did the US stock market have quite a year. 5 days after that death cross, stocks were up over 2.5%. 21 days after that signal, stocks were up almost 7%. And 126 days out, 6 months later, stocks were up almost 14%. In a couple of days, we'll get that long-term 250-day percentage, but it's going to be green. It's going to be green. So the question is, if and when we're going to get a similar signal here, another death cross pointing to strong stocks for 2024. The US dollar, not quite ready to roll over yet. In fact, it's digging in at a shelf of former lows around 101. Now, this is a logical place to see buyers step in and support higher prices. Right? 1, 2, had a little failed breakdown last summer, and now 4 contact points. Buyers are defending this 101 level, and as long as that's the case, most likely we can see that 50-day moving average drop below the 200. Also, January is the strongest month of the year for the US dollar. Now, this is a US dollar seasonality chart going back to 1980. So we have 43 years, almost 44 years of data here. So, plenty of data, and it is overwhelming. January, number one month of the year for the US dollar. And this is what January tends to look like. Up and to the right. Now, the dollar's catching this month. I doubt that stocks are going to have a positive month, but who knows? For now, I want to err on the side of the negative correlation until we have any evidence that this is changing, that this is breaking down. We got to go with what's working. As long as this negative correlation remains intact, if the dollar's catching higher, I have to err on the side that stocks are going to struggle at the very least, perhaps even catch lower. But it's not just the dollar index that's digging in at a critical level. So are the individual components of the dollar index. Here's the euro, 57.6% of DXY, failed breakout above that 110 level, dropped 100 pips to start the year. That's a strong move lower. We also have a negative, a bearish divergence in momentum, showing that the bulls are slowly losing steam. That buying pressure is slowly coming off, and we're seeing it. So as long as euro US dollar is below this 110 level, I imagine that the dollar's continuing to hold above 101. Also, the dollar CAD, USD CAD, just under 10% here of the dollar index, looks a lot like DXY, digging in at a shelf of former low. So as long as US dollar CAD's above 130.150, chances are the dollar index is also holding above its critical support level. And last but not least, the dollar Swiss franc. Now, sure, the US dollar Swiss franc is only 3.6% of the US dollar index, but it just retested its 2015 lows. Extreme selling pressure took it all the way down to that 83.35 level. So to see a bounce in the coming weeks makes perfect sense. So to recap, the US dollar index has had a negative correlation against global equities since 2016. And that correlation remains intact. Now, heading into 2023, dollar was coming off hard. Stocks were doing really well. But now it's 2024. Dollar's bouncing off a critical area of former support, and the components of the US dollar index are also reacting to critical levels, suggesting further strength from old King Dollar in the near term. Now, if that's the case, gotta imagine that stocks are struggling at the very least and potentially selling off. That's all for today. If you enjoyed the video, smash that like button. If you want more of my research, head on over to allstarcharts.com. There's a link below in the description. Right for premium members there. And if you become a premium member, you get the entire team's research. Definitely recommend. Thanks for watching. I'll see you next time.